It's about that time of day again, folks. Welcome back to your nightly newsletter, boys and girls. Joseph James here. Tuesday evening, February 2nd, 2016. First full week of this second month of the year 2016. Hope you're having a great week with us. It's been a wild one this week so far, and it's only Tuesday evening. Got another jam-packed newsletter in store for you guys and gals. We got planned here tonight for crude, S&P, gold, and euro. Starting out tonight with the oil market, crude oil is bearish, but we're sitting on major support this evening, so we expect the sellers to take their profit here and wait for price to correct higher before selling more tomorrow. 2 days in a row on the oil market, just pounding those lows. We talked about it last night. We got big news tomorrow for oil. This might be a chance for the buyers to get this up off these lows. I got a plan for both sides tomorrow morning on crude oil. How about the S&P? The E-mini is also bearish this evening. We have a completed measured move and a spike in channel telling us the best opportunities will be to sell after a bullish correction tomorrow. Pretty impressive. Boy, those bears, they put a whooping on those bulls today. We talked about it last night. The buyers had a chance to hold it, right? But they just gave up on it, and it's tumbled today. We got a plan for both sides tomorrow on the S&P. Gold is bullish and trading inside a megaphone pattern. Yeah, megaphone. Haven't seen one of those in a while. The elusive megaphone, the expanding wedge on gold this evening. Got a bullish bias to it. Megaphone pattern on the yellow metal, which will likely send price up to the highs before we see a possible bear trap to push prices higher tomorrow. Got a couple interesting scenarios to watch for tomorrow. I'll tell you though, if you're a seller on the yellow metal right now, you might want to grab a book. It might be a while before we get any opportunities here to get short on this thing. Got a plan for the yellow metal. The euro is bullish with a spike in channel, and it's headed to test the highs possibly early tomorrow morning if you're watching this video in Asia in a few hours, right? Probably up there around those highs. The most reliable trades will come at the lows of the bull channel on the euro, but we may get a chance to trap some sellers at the highs to complete the measured move. We got this measured move just waiting to be tested overhead. We got a great plan for crude, S&P, gold, and euro. Before we jump into our charts, though, and give you guys some strategies for tomorrow, I do want to remind you to make sure you're watching this video on our trading blog here at sidewaysmarkets.com. If you're watching the video on our YouTube channel, that's wonderful. Lots of great videos on our YouTube channel. In the description of the YouTube video, you'll find a link that'll take you over here to sidewaysmarkets.com. First of all, I have an invite for you. I have a free pass for you to come out and test drive our live trade room as a guest. If you're not an advanced member here with us at School of Trade, grab your free pass to test drive the trade room in the upper left-hand corner. In the lower left-hand corner, you can register to join our nightly newsletter mailing list. You'll never have to worry about missing another newsletter video ever again. I'll send you an email. Promise, no spam on there, right? Just the nightly newsletter. All I need is your name, your email, right? Make sure you check your inbox. I'm going to send you a verification email once you verify it. And then, of course, right below the video tonight, you'll see a spot to download all the charts that you'll see me using in tonight's video, right? Download those charts below the video. And then over on the right-hand side, I will encourage you, if you're not a member here at School of Trade, register for our free trial, learn more about what it means to be a member, and don't forget, I've always got someone standing by 24/7, 365 to answer all your important questions about brokers, charts, data, trading strategies, whatever the case may be. No question too big or too small. We always love answering your questions. Jumping into it here, guys. Tomorrow's the third day of the month. Let's make sure we check out our economic news. Now, this is the first week of the month, right? First week of the month always ends with non-farm payrolls. That's right. We got non-farm Friday coming right around the corner, right? Kind of one of the most important news events that we get. There's really only two major news events that have long-lasting impacts. One of them is this Friday, the employment situation. Can you guess the other? It was last Wednesday, the FOMC announcement. Those are the two. Of course, FOMC will happen 8 times a year. And then the employment situation is the first Friday of the month, unless the first day of the month is a Friday. So we know that we're in the first week of the month. We know that Friday is Employment Friday. And that means that tomorrow, Wednesday, is a very, very, very big ADP employment report. Now, this ADP employment report tomorrow morning at 8:15 Eastern Time, it's kind of a weird report. report, because what really goes on here is you're not going to see a lot of reaction to that number tomorrow morning at 8:15. You'll see it's not listed as a major news event. It's only kind of a yellow starred event. It's not a major market moving event, right? Like we saw earlier this week, those red star numbers. But what happens is that when that number comes out, that's a leading number ahead of Friday's employment situation. So what ends up happening is there's a definite self-fulfilling prophecy that ends up playing into Friday's news number. Bottom line is, on Wednesday morning, all the professional asset managers now start manipulating their portfolio so that they're ready to basically have everything priced in, right? You've heard that term before. The markets will have the news priced in. Well, what ends up happening is there's a self-fulfilling prophecy to it. Traders see the number come out tomorrow morning at 8:15. Whether consciously or subconsciously, they'll now start placing their quote-unquote bets, right, ahead of the number on Friday. That's why sometimes, right, you'll hear people say they've already priced in the news, right? They see what the expectations are, and again, whether it be consciously or subconsciously, right, the markets tend to deliver ahead of, right, Friday's news. So a lot of times, if the number comes out on Friday and it's right as expected, you won't see much movement at all, right? Because the market has already kind of adapted to what that number was expected to be, and it will all start tomorrow morning at 8:15 a.m. Eastern Time. Now, I mentioned that because it's important. The ADP employment number, you'll start hearing it referenced, right, as the day goes on tomorrow into Thursday, and of course on Friday morning, everybody will be talking about it. It won't have too much of an impact though tomorrow morning. You'll notice it won't have a huge impact right away, right, but it will definitely have a kind of a lagging impact. Now, that 8:15 news number, we'll of course treat that like every other news report. We'll trade right around it, 5 minutes before, 5 minutes after. And you'll notice though now, then we have about an hour and 45 minutes before we go into the 10 o'clock ISM manufacturing, and then unfortunately, we have the inventory report tomorrow. Now, why do I say unfortunately? Well, professional traders have learned by now not to trust any news, really, but the inventory report is what I call a gambler's report. Lot of volatility, not a lot of liquidity. So the market whips around, right, like wildfire around that 10:30 news number, but it's very difficult to catch that knife, right? It's like trying to catch a bullet. It's very difficult. Now, be careful, because a lot of traders will practice trading that news number in simulation. But remember, simulated trading will not prepare you for the real market where there's got to be a buyer and a seller, right, for both sides of the coin. What I always tell my students is after 10:15, right, between 10:15 and 10:45, you really got to be careful on Wednesday mornings. And what I'll say to you, which I say every Tuesday night's newsletter, is we love trading the oil market, but this is one time every week where we really got to be on our best behavior. A lot of traders won't even touch this market after 10 o'clock. So be safe tomorrow, right? Don't trade too close to the petroleum status report tomorrow. And then again, be careful, right? Even if you practiced on a simulator, fading those big breakouts, remember, a simulator is not going to prepare you for the lack of liquidity. Remember, during those big news events, volatility spikes, but liquidity drops, and that means your stop loss cannot be relied on. I always recommend sit on those hands between 10:15 and 10:45. Make your money early if you're trading oil on Wednesday mornings, right? You got plenty of time, definitely between 7 a.m. and 10 a.m. You'll have 3 hours of very good U.S. morning session price action, and then after that 10:15 alarm goes off, we'll be sitting on hands and we'll watch, right? We'll watch. It's the safe way to do it. And again, you've got so much opportunity every week, right, to make money in any of these markets. Wednesday morning after 10 a.m. on oil is one of those times when we take the safe route. We take the safe route because you're going to get a lot of whippiness around that news event. Now, let's play catch up here. I wanted to make sure that we discussed the two different news events that are coming out tomorrow morning. Let's start up here by looking at oil tonight. Crude oil is bearish, but we're sitting on major support this evening. We've got a measured move down. We're at the low of this channel, right? So we expect the sellers to take profit here and wait for price to correct higher before selling tomorrow. Remember the old saying, buy low, sell high. Right now we are low. But to be a buyer right now is concerning because I'm not sure if you've looked left recently, but this is the second day in a row now. We have been nothing but bearish, literally pegged to those lows. So what I always tell my students, I'll tell you the same thing. It doesn't matter how good of a buy signal I get. It doesn't matter how much support is down here. It's a bearish market. And so you really got to be careful selling into that freight train, right? That is the sellers now coming in. So if you want to be a buyer, look for a new higher high, wait to see if we can hold the pullback, and then you'll have some confidence, right, to be a buyer. Let's play that game, right? So sellers kept control for the second day in a row today with a bear channel and a measured move down. Our goal is to sell the highs of this channel, which tells us to stay patient to sell those highs tomorrow. Buyers, you guys will be looking for a higher high and to hold the pullback for a shot at buying back to those channel highs. Let's play that game. What if price goes higher? What if price goes lower here tomorrow? If price goes lower here tomorrow, we really have a very, very difficult scenario. You're going to have to be relatively aggressive, right, if this thing does go lower. If it goes lower, the best opportunity for sellers is to wait for it to shoot lower, let it correct higher, and then look for buyers to try to buy it, right, and then wait for them to fail and sell it, right? What we don't want to do is we don't want to sell it right at the low. That's the hard part, right? Again, remember, sell high, right? Don't sell low. If we make it a habit of selling low, we're not going to be very successful in our trading career. So if it spikes down, resist the temptation to chase after it. Wait for the sellers that are in that move to take their profit. You'll see buyers come in and try to buy the pullback. If they fail, then you can sell it and finish it right down, right? If it does push lower here, we know we have an A, B, C, D, right, measured move waiting for us down at that 28.94, right, 29 even area to the downside. We get a lot of support, though, before we get there. As you can see, we're right down at the lows of this channel, and you really can look at this almost as a multi-day spiking channel right now. And, of course, we're coming off of the high down to the low. We call this channel rotation, right, up to the high, right, and down to the low. So right now, recency is most important. We're expecting profit taking from those sellers. We're expecting the buyers to see this as well, right, and look to try to buy that low. Again, not a very reliable buying opportunity right now. Remember, the key word is reliable. There's really no reason why this market couldn't just make one more leg down and then spike higher, right? Again, like I said, trying to buy just because you have a bunch of support, you're in a bearish market. So if you want to be a buyer here right now, let's play what if price goes higher now. If price goes higher, we're looking for those buyers to hold a pullback. If they can hold a pullback, then they've got a shot to buy it up to the top of the channel, up to the top of the range, up to that 31.11, right, resistance zone, and then, boy, do I dare say, all the way to 31.62. We'll see. Tomorrow we have inventories at 10:30 a.m. It wouldn't be the first time or the last time the inventory report really pretty much turns everything around. Like I said, a lot of volatility, not a lot of liquidity, so it can easily spike higher after that news number comes out. It's all going to start, though, with the buyers holding that first pullback, right? That's what they need to see. And, of course, the sellers, right? Sellers will be looking for the exact same thing. As price goes higher, we're looking for, again, channel rotation. The sellers ideally want to see this price all the way back up to the high of that channel, and then, of course, look for sellers now to try to buy a pullback, right, so we can sell into their stops. The moving average now will come over the top, and then, of course, we'll look to sell those rips, right, with retracements, wave patterns, continuation patterns to take it back down again. Remember, after the bullish correction, the first opportunity for the sellers will always be a buyer failure. That'll be the most aggressive, but it will be the first opportunity to sell those highs. The next opportunity, which is a lot more reliable, is going to be that next pullback, right? So it traps those buyers on the wrong side, new lower low, holds the pullback, then you know the sellers have it, right? They get a firm grip on it, and we'll try to make that move back down. The most reliable way to sell right now is to wait to get up off these lows, so stay patient for the sellers. And if you're a buyer, wear a helmet tomorrow ahead of the inventory report. Again, look for that new higher high and then hold that pullback. Just be careful. This is a bearish market right now. And so wise traders will be waiting for that correction and then selling into bullish failure. Let's keep moving over here now with the S&P. S&P is also bearish this evening with a completed measured move and a spike in channel telling us the best opportunities will be to sell after a bullish correction tomorrow. Very similar we just talked about on the oil market. The bears took clear control early in the session today with a spike in channel, and they finished the session with a measured move. Sellers want to see a bullish correction to sell this at a higher price, and they'll be watching for buyers to fail on the pullback. It's literally identical to what we just talked about on crude oil. Now, we know the spike in channel may correct all the way back to that 1920 area overhead before the sellers resume this trend. And the buyers are looking for a new higher high and hold a pullback to have confidence to get long during that correction. Spike in channels are a really great situation for both sides. You got to be careful because obviously a spike in channel, this is a bearish spike in channel down. It is clearly bearish, and just like I said with oil, right, it doesn't matter how great the support is down here. There's no reason why it can't keep going and then snap higher, right? I call it residual sellers. What happens is when the market's been selling off like this, right, over and over and over and over again, I don't care how much support I have just sitting right here, right? Because what oftentimes happens is you'll see buyers jump into it. They place all their stops right below that low, and then it just finds a way back down, runs all the stops, convinces you to be a seller now, right? How quickly we forget, and then the next sell fails, and it shoots right back higher. That's why it's so difficult to be a buyer. Again, just because we have support does not mean we should be a buyer. It's exactly why I always tell my clients, and I'll tell you the same thing, right? We only buy double bottoms, right? We only buy double bottoms in a bullish trend, right? Makes sense? Right? We don't buy double bottoms in a bearish trend, not if we want to keep the money in our trade account, right? Big difference there, right? Big difference. Keep that in mind tomorrow, right? And anytime you're seeing these strong markets that appear to be oversold. Remember, the market can remain quote unquote irrational a lot longer than we can keep our trade accounts opened up with our broker, okay? So we have a bearish spike in channel. And remember, you guys are experts on this spike in channel because you tune in every evening on my newsletter. And so we know that this spike in channel is a very strong, right, a very strong pattern. And we know that the correction zone is all the way back up at the base of that channel, right? So 1920. Now, the buyers look at this and they drool over a big channel, right? See how the proportion of this is a big channel compared to the spike? See, this is one of those scenarios where the buyers actually have plenty of room to get this price going higher. I could also see an area, right, of concern around this 1910, right? So those are going to be the two areas to look for corrections. Okay, obviously buyers, you guys are looking for a new higher high, right? Get a new higher high, hold that pullback, and then you're gunning for resistance levels overhead. 1910, 1920, right? Those will be some good targets. Once you get up there, though, remember, that's when we're going to be in that correction mode for that spike in channel. Then the sellers now, they're looking for the buyers to try to buy it, and if they fail, right, that's going to be the big sell-off, right? The very well-deserved sell-off for the patient bears, right? Remember, these spike in channels, magic number is 3, 1, 2, 3 legs down, spike, the B point, right? The D point, 3 legs down. We do expect to see some profit taking here. We do expect to see a bullish correction. Again, if price goes higher, bulls want to see a new higher high, hold the pullback up to resistance areas overhead, and also too a new higher high where the pullback cannot hold, right? A little bit aggressive because it's not that big of a correction here, but you will definitely be able to get a scalp, right, back down to double bottom, right, at that measured move. So if the buyers can't hold this pullback, look for a scalp back down to that double bottom. And then, of course, if it does go lower from there, that's what you got to be worried about being a seller through that measured move. If we do go lower from there, look for a third symmetrical leg to push lower, and that puts us pretty much right into major support, and then it's rinse and repeat, right? If we do run lower, just like I talked about on crude oil, be very careful selling at the low, right? Be very careful selling the low. I'll wait for price to come back up, right? Look for buyers to fail and sell right into their failure. And then we have that major support level waiting for us around that 81.5, 1876, right? If we do get a strong bearish reaction, right, to make that third leg lower. What is more likely, again, is to see, right, that bullish correction. Sellers will be waiting patiently for that correction and then waiting for the next pullback to fail. Because again, we want to sell high, and so we'd love to wait and see that price push higher, right, for the next selling opportunity on the S&P. Okay, open-minded here for both sides right now, but obviously with the bearish trend on this spiking channel, the odds are definitely on the side of the sellers. Look for a double bottom, right? Look for another test of that 1889 if these buyers can't hold that next pullback, and then possibly a third leg down. But if the buyers hold that pullback, though, we're looking at 1910, possibly 1920 before that next push lower, right, for the sellers. How about this gold right now? Boy, we nailed that one out the park today. Last night on the newsletter, we talked about how we were expecting gold to be a little bit trappy this morning. And I hope you guys took my advice and waited for that trap low. Beautiful trap low. I had no idea, though, that we're going to get such a beautiful pattern here tonight. This is a very obvious bull channel, right? Bull channel break. We have one leg up, two legs up, but actually it is a megaphone. Higher highs, lower lows with a bullish bias. Now this is a really interesting chart. We don't see such perfect, postcard perfect megaphones on this, right? We don't see this very often. Megaphones are pretty darn rare. Think about it. These are higher highs and lower lows, for crying out loud. Megaphones scream volatility, right? And that goes hand in hand what we're seeing right now in the US dollar, the euro, and of course the rest of these markets we're trading right now. Gold is bullish and trading inside a megaphone pattern, which will likely send price up to the highs before we see a possible bear trap to push prices higher tomorrow. Gold has a bullish bias to this megaphone pattern, and with three tests of the lows, 1, 2, 3, megaphones, triangles, flags, spiking channels, the magic number is 3. 1, 2, 3. And what you want to remember is the magic number is 3 going against the trend direction, right? That's one of the most common questions I get, right? Is this 3 pushes higher? It doesn't matter 3 pushes higher. It's 3 counter trend pushes back, right? So whether it be, again, a triangle or a flag, right? 1, 2, 3, and then lift off, right? If it was a flag, for example. Okay? So really good example here. This tells us right now that we expect the bulls to finish this job back up at that megaphone high. Now, this is where it gets interesting. We expect the bulls to take profit at the highs of the megaphone, but we can't sell the highs with confidence, right? Because this is a bullish market. So the buyers will be looking for the bears to fail off the highs for a possible aggressive, it is aggressive because you're up at the highs right now, push up to that measured move, waiting up around this 35.3, right? And of course, we have another major resistance area overhead at 36.7. Okay, sellers need to be careful right now with this of a pattern, but they'll be looking for a lower low and to hold a pullback to even consider selling short. I'll tell you right now, it's really difficult for me to say selling on this market right now, just like buying oil, right, and buying the S&P. These are very, very strong trends we have right now. And what's going to happen is it's likely going to get a little bit ugly up here at the highs. here's what I'm expecting. I'm expecting these sellers, right, that's coming out right now just after 6 p.m. Eastern time when I'm recording this video. I'm expecting any pullback right now to be bought, right? I'm expecting any pullback right now to be bought, and I'm expecting us to complete the job up to the high of that megaphone. Now, we have news tomorrow morning at 8:15. That may interrupt this, right? That's all I can see on the short-term horizon. That may have, right, that may cause us to kind of get stuck in the middle here or try to run lower. But historically speaking, three counter trend legs, right, on this megaphone, and we're going to be destined to go back into the high. At the highs, though, this is where you really can't sell it, right? You really can't sell it. So again, we expect any pullback here right now to be bought up, right? Finish off the job here. What a lot of buyers are going to see is they're going to see that measured move. They're going to see that major resistance. They're going to see it just sitting there. And what they're going to look for is a little bit of juice to finish a larger move higher tomorrow morning. And what I'll expect to see is I'll expect to see profit taking from the buyers. The sellers now will try to sell it off those, right, off that high. If they fail, though, right, we go up. Profit taking occurs, sellers will try to sell it, right? This is what the sellers are going to need. The sellers are going to need a lower low and then hold a pullback. Then once we hold the pullback, then you can start being more aggressive. Wait for that pullback to hold, because that's what the buyers, like myself, are going to be watching to fail, right? So once again, we go up, bulls take their profit, price comes off that high. Sellers now think, let's sell the high. They wait to sell it at a 50% pullback, right? Whatever it is. And if they're successful, now the sellers know they can pile on. Just again, be careful. This is a bullish market, right? So don't get too greedy on it. Quick first target, tighten down that stop, treat it as a scalp, right? And hopefully we'll be able to get this thing to run all the way back to those lows. What is almost, I don't want to say any guarantee, but what's more likely, though, is to see that first pullback fail and it snaps higher. It'll be real fast, right? Then it will be a double press at the high, and then we'll expect, right, that profit-taking session and to see it pull back down. So again, as we go higher, right, sellers want to see a new lower low, hold that pullback, and they can be confident selling off the highs. Buyers right now, again, like I said, in the short term, if you're watching this in the Asian session, right, look for those 50% pullback areas, look for the sellers to fail and finish off that job higher. Then look for sellers to fail at the highs. Again, for an aggressive, it's aggressive. You're up at the highs. So whenever we have to be a little bit more aggressive buying near the highs like this, look for it to come off that high so you're not buying directly into the high of day. And then again, use those seller stop losses as the juice to give you that higher probability of getting your first target filled, right, as we push up higher. Again, sellers, stay patient right now. Stay patient right now on the gold, and then we'll wrap up here with this nightly newsletter tonight on the euro. Euro is bullish with a spike in channel, and it's headed to test the highs early tomorrow morning. The most reliable trades will come at the lows of the channel, but we may get a chance to trap some sellers at the highs to complete the measured move, almost identical about what we just talked about on gold. We have a multi-day bullish spike in channel, and we're trading higher off the lows this evening. Our goal is to find buying opportunities on the way up to the channel highs, take our profit, and then look for rotation back to the channel lows so we can do it all over again. We may see an aggressive opportunity at the channel highs if the sellers fail, exactly what I talked about on gold, which would allow us to get the measured move accomplished before heading back lower again. Sellers have a challenge right now. They want to wait for the completion of channel rotation, which will ideally complete that measured move, and then they can sell right after we get that measured move accomplished. As you can see here right now, very, very obvious, bullish spike up into a bullish spike in channel. Right, little example there of a double press overshoot of the high, right, slams right back down aggressively back to those lows. But you'll notice, though, the buyers just immediately bought it right up, right, overshoot of the high, didn't even come close to overshooting at the low. Now, channel rotation. low up to high, take the profit for the bulls, back down to those lows. Buyers now start buying at the low, and their objective now is to finish their rotation back up to the high. Any selling right now will be met with buying pressure, right? So as this price pulls back, buyers will scoop up bargains, right, on the way up to that high. Once we get to that high, that's where, like I said on gold, we're just a hop, skip, and a jump away from a very, very big resistance area at 96.85 here on the euro. And of course, that will complete this kind of multi-day measured move, right, and a third leg higher. So as we get up to the high of that channel, just as we talked about on gold, right, I would expect to see some buyers take their profit. Look for the sellers to hold, right, to have some confidence, sell it short. I think you're a little bit too aggressive to be a seller during a spiking channel. But if you do want to be a bear after we touch those highs, you're looking for that lower low pullback to hold and then down below the channel. But you got to remember though, all those bulls, those residual buyers, right? Remember this kind of steamroller effect. It doesn't matter how strong that resistance is, right? All it takes is a couple stops to get run, and this will get pretty much thrown up to that 96.85, right? Which then becomes a double press of the high. And look what happened back here when you get a double press of the high, right? Look at that big sell-off, right? If the bulls get a double press, which basically means that instead of rotating back lower, it continues to go higher. It makes perfect sense. It'll finish off that measured move, and then we should see aggressive profit taking from the buyers, and sellers will jump all over it. Now, don't forget, we have a spiking channel on our hands right now, so as this price goes lower, buyers will be looking for opportunities here to buy it. We have major support at 90.35, but again, the objective is to get up to complete the measured move and up to that channel high. All right, guys, you got a good plan here coming out for tomorrow. I apologize the voice tonight. I picked up a little bit of a head cold here somewhere between last night's newsletter and today. It's been a little bit funky weather here in Los Angeles, so I'm going to head home early tonight. I'll skip the workout and rest up, get some green tea, some chamomile tea, should I say, and we'll come back and do it all again tomorrow. Hopefully tomorrow I'll have my voice here in full steam ahead tomorrow. Don't forget, guys, before I let you guys go, don't forget, share this information with a friend. Give me a thumbs up on the YouTube video. And please don't forget, you can register for our free trial on our website. You can learn more about our beginner, intermediate, and advanced levels of membership. And don't forget, we always have someone standing by 24/7, 365 to give you guys a hand. We got Super Bowl weekend coming around the corner. Who you got? Who's your team? Now, I got to root for the team that beat my team, the Patriots, so I'm going to be a Broncos fan this weekend. But I'll tell you, those Carolina Panthers, boy, do they look legit. They definitely look like a force to reckon with. I'll tell you, though, it's tough not to root for a Peyton Manning right now, isn't it? It will be a beautiful way for him to finish up an amazing career he has. Who you guys got for the Super Bowl? Leave me a comment. Send me an email. My email address is jj@SchoolOfTrade. And again, I'm going to head out for now. I'll see you tomorrow morning, 8 a.m. Eastern Time. We open up our trade room tomorrow night, 8 p.m. Eastern Time for our nightly newsletter. Be well out there. Be nice to each other, will ya? I'll see you next time. Adios, amigos. Bye-bye for now.